Hey, it's Dan the Mortgage Man, and you may be looking to finance a condo, and you might have been told that the condo you're looking to finance is what they call non-warrantable. Want to learn more about condos? Stick around. Hey, it's Dan the Mortgage Man, and you are probably wondering what a non-warrantable condo is. Okay? When it comes to financing condominium projects, Fannie Mae and Freddie Mac, the two biggest buyers of conventional mortgages, have some very clear definitions as to what a warrantable condo project is and what a non-warrantable condo project is. Let's start with what a warrantable condo project is. What a warrantable condo project is it is a condominium project that meets Fannie Mae and Freddie Mac's criteria for conventional financing. Now, normally what they're looking at is you're looking at if the project is subject to some additional units to be built or additional phases that are yet to be built as part of the overall project. A lot of times that can make a project non-warrantable. The other things that they're looking at is how many of the units within that phase have been built. Have substantially the majority of those units been built, and have they been sold? And have they been sold to homeowners as part of those sales, okay? So the percentage of pre-sold properties can make a difference in whether or not a condominium project is warrantable. The other thing that they will look at too is they'll look at certain aspects as far as the budget for the condominium project, whether or not the condominium project has been turned over to a homeowners association that is run by the homeowners who actually own condo units within that project. And they'll also look at how many of those units are owned by investors or are rental units, and whether or not there's a large percentage of those units that are, if you will, commercial, right? Sometimes you can have a building like the one I'm sitting in right now. This is my personal non-warrantable condo. Sometimes you can have a unit that is part of a building that has mixed use, right? Where there's a percentage of those units that are commercial, and sometimes those percentage of commercial units can make a project non-warrantable, okay? So what happens if you have a condo project that you're looking to buy a property in, or you have a client that's looking to purchase in, and for some reason you find out it's non-warrantable and you have a problem with financing, okay? A lot of times lenders will not finance non-warrantable condominium projects because there's nobody to buy them, right? A lot of times Fannie Mae or Freddie Mac won't buy those loans, and if you can find an investor to buy those loans, a lot of times they're done at terms that are less favorable than what you would get for a traditional conventional mortgage, okay? Now, we do a ton of non-warrantable condominium projects. So if you have an aspect to your condominium project that doesn't meet Fannie Mae or Freddie Mac's requirements, maybe it's a percentage of units that are subject to, let's say, commercial, or maybe you're a project that has additional phases that are going to be built and so on. There's a number of things that can make, of course, a project non-warrantable. But if you have a condominium project that's non-warrantable, we will finance them. Okay. Now, when it comes to non-warrantable condos, we break them into two different buckets. Okay. You have a condominium, if you will, that's currently non-warrantable, but it's going to become warrantable at some point in time in the future. Those are usually brand new projects where they're just getting started. There's additional phases that are going to be built, but once all of those phases are built and the project is completed and those units are all sold to homeowners, it will become what's known as a warrantable condominium project. It's just not currently warrantable in its current state, okay? So if you have a condominium project that is going to turn warrantable at some point in time, in most cases, we are able to finance those like we would a warrantable condo, right? 30-year fixed rate if you want to do something like that, or traditional conventional financing. We will do those at really aggressive market terms, and in some cases with down payments as little as 10% down. And we've even done a few with a smaller down payment than that on a case-by-case basis, okay? So those are non-warrantable condos that are going to become warrantable at some point in time. Right now, there's a characteristic to that project that makes it not meet Fannie Mae and Freddie Mac's criteria, but it's going to meet their criteria at some point in time, okay? The other type of non-warrantable condo would be what I like to call an evergreen non-warrantable. And what I mean by that is it is a condominium project that is never going to meet Fannie Mae or Freddie Mac's criteria, short of them changing their criteria pretty significantly, okay? Those could be, projects where you have a large percentage of commercial, or, there are certain things that are attributes to that project where maybe it has a large percentage of rentals, or different aspects that make that a project that is not likely going to ever be a warrantable condominium project. Okay, in those types of projects where it is truly non-warrantable, it's never going to convert to being a warrantable project. It's never going to meet Fannie Mae or Freddie Mac's criteria. We will still finance those, okay? A lot of lenders won't touch either of those two types of non-warrantable condos. We will do either or. The options that you have for financing can vary a little bit depending on what type of non-warrantable you have. Something that's going to eventually turn warrantable, we do pretty much under conventional, traditional conventional terms, and a ton of options there. If it's something that is truly going to stay non-warrantable, we do those as well too. There's a few less options that are available under that program, and generally those rates and terms are going to be slightly higher than what you would pay under this scenario here, okay? So you can have a warrantable condominium project that meets Fannie and Freddie's criteria as it is right now, generally an established project that's been turned over to the homeowners association, generally not subject to any additional phases or units that are going to be built. And then you can have non-warrantable condos, which can be something that is on its way to becoming a warrantable project as the project is completed. And then you have something that's truly going to stay non-warrantable, something that's never going to meet Fannie or Freddie's criteria, or it's not likely going to meet their criteria, short of it being changed. The good part is, irregardless of any of those types of condominiums you have, we can finance them, okay? We got a ton of options available. Love to help you out. Again, I'm Dan the Mortgage Man, Dan Morales. You can find me at danmorales.com. That's DANMORALEZ.com. My NMLS number is 709-729, and we are an equal housing lender.